So friends, welcome to this topic on money laundering. Before that, I would like to thank all of you for having subscribed to my YouTube channel, and subscriptions are increasing and people are liking it. Videos and in my website also BankTekSkills.com, wherein a lot of videos on various topics of banking have been uploaded, and I shall be uploading what the future of banking would be. So kindly do like my videos, subscribe to and press bell icon so that you get notifications when I post important video for all of you. And also my website BankTekSkills.com, I think I've got overwhelming response to my website, so I would request all of you to please subscribe to it and see a lot of videos on various topics. So let's start. What is money laundering? It started with the concept 9/11 attack on America, World Trade Center, right? If you hope some of you may remember, I think most of you must be very young at that time. So Twin Towers were attacked, World Trade Center at America, and it was found that money was paid to these perpetrators of these atrocities on humanity through money laundering. After that, the world became very aware of this money laundering, and a lot of steps were taken to put money laundering in place. So terrorists hijacked 4 commercial passengers jet airlines, and hijackers intentionally crashed 2 planes into Twin Towers of World Trade Center at New York City. Both towers collapsed within 2 hours, destroying nearby buildings and damaging others. A third airliner was crashed into a Pentagon. 4th plane was targeting either Capitol Building or White House, but crash interfered near Shanksville in rural Pennsylvania. No survivors from any of the flights. Nearly 3,000 people died, and 19 hijackers also died. 60 police officers, 343 firefighters, 8 private emergency medical technicians and paramedics also died. So it was a huge effect, right? So, and in 2011, it's Osama bin Laden, the one who perpetrated this crime, who was the mastermind behind this, was found in Pakistan and killed. So what is money laundering? Conversion of illegal obtained money through series of complex transactions as to hide the origin. That's basically converting dirty money into clean money, right? Money laundering process criminals use to erase connections between crimes and money and concealing its criminal sources. Criminals attempt to hide and disguise origin and ownership of these dirty money from their various mode of operations and avoiding prosecutions. So there are 3 stages. Placement, when we put bulk cash into the financial system. Layering, we transfer different smaller amounts from that big cash amount, bulk cash placed in a financial system. Layering, so we transfer accounts to different accounts, different places to avoid audit trail. Then integration, then after of those layering money, we invest in real estate or a stock market, or we find any proprietorship company and all that. So we are integrating the dirty money into the Indian economy. So this is how it works. Ill-gotten money deposited in Bank A, Bank B, Bank C, it goes to layering Bank D, Bank E and Bank F, then transfer to Bank G, H and Bank I again. So legitimate business it is used for. What is anti-money laundering, AML? Why KYC? Basel Committee recommendation 1988, customer due diligence has to be done. USA Patriot Act 2001, detect, investigate and prosecute money launderers. And recommendation of FATF, Financial Action Task Force 1989. And RBI guidelines were issued on 29th of November 2004 on KYC and money laundering measures. So there is a money laundering reporting officer in every organization. For banking, we have FIU, Financial Intelligence Unit, IND, for the whole country, and it reports directly to Economic Intelligence Council, EIC, headed by Finance Minister, and then it goes to FATF. The Financial Intelligence Unit, IND, it belongs to our country. So RBI, DCA, SEBI, RDA report to it. Banking companies, financial institutions, intermediaries also report to it. And intelligence and information agencies also report to FIU intelligence, Financial Intelligence Unit IND, Narcotics Control Bureau, Economic Office Wing, and others, right? So penalty, 5 lakh penalty is there. Then the section 4, section 12, banks and financial institutions must maintain records and report to FIU IND. Minimum 10 years rigorous transactions, minimum 10 years records have to be maintained between banks and clients for, and any failure to produce the record, there is a penalty of 10,000 rupees. RBI guidelines under section 12 and 15 of Prevention Money Laundering Act 2002, banks to maintain records of all cash transactions equal to more than rupees 10 lakhs and reported to MLRO by 15th of next month. CTR, cash transaction report, where forged or counterfeit currency notes have been detected. And STR, suspicious transaction report, by 7th day of the confirmation of suspicious, this report has to be submitted to MLRO. So any transactions which is contrary to the profile of the customer. Know your customer. I think we all know, those who are new to the banking or going to join banking, this is a very important aspect of banking. Know your customer, because if he commits a fraud or he uses banking channels for money laundering, so who is a customer? A person or entity who maintains an account or has a business relationship with the bank. One who has on behalf of the account is being opened like trustee. Any person, entity connected with issue or demand draft, even depositing various checks for one-off single transactions like utility bill payments. So these are our customers. KYC policies, customer acceptance policy, customer identification process. So customer acceptance policy has to be approved by the board of the bank, wherein besides officially valid documents or OVDs declared by RBI, what all other documents a bank can take to accept any lead into a customer. CIP, customer identification process. So it is using source documents to identify a customer, like ID proof and address proof. We take Aadhaar card, PAN number, or a voter ID card, driving license, and so on, passport. And monitoring of transactions also takes place. All the transactions have to be monitored. And risk management. Customer acceptance policy. Bank should not accept requests for opening anonymous, fictitious, or benami accounts, which we cannot do. Opening of accounts where due diligence is required has to be done even after the account is opened or before even account is not opened. So due diligence, reliability of data furnished, if it is in doubt, we have to do due diligence, re-verify it and confirm that is the same. Ensuring that new or existing customer's identity card do not match with a person non grata, like criminals, background terrorists, or violators of laws, and so on. This is customer acceptance policy. Identification process. How do we identify? Why we need to identify? To get protection under section 131 of NI Act. So 131 says it gives you freedom of any legal action not to be taken against a bank if a check is collected on behalf of a customer, because we know the bona fide of the customer. That is section 131, collection of checks in clearing. Minimize frauds, check misappropriation to weed out undesirable customers, to prevent money laundering, and to avoid opening of accounts with fictitious names and addresses. So these are the valid OVDs, officially valid documents. Passport should be valid, election ID card, PAN card, government defense ID, driving license should be valid, not expired, ID card by employer or any public authority also. Address proof, telephone bill, electricity bill not more than 2 months old, any assessment order, salary slip, bank statement, bank account statement, credit card statement and letter from employer, subject to bank's satisfaction. For rural branches, we have to take certificates from local bodies, ration card, NGOs will suffice for establishing ID and address proof of the applicant. Important points for ID proof and address proof: should be verified in original OSV, original seen and verified, and the person has to sign. Photocopy of those documents have to be taken and kept with the documents account opening form. Signature of the client should be obtained on the photocopies to avoid disputes in future. And UIN, Uniform Identification Number. So government has issued an advisory, RBI, every citizen has to be given a UIN, Uniform Identification Number. So that is there in the passport also. Monitoring of transactions. So as I told you, any counterfeit currencies, large value transactions, suspicious transactions have to be reported. Large amount of cash, any transactions involving that, transactions which do not make economic sense, and avoid reporting and any criminal activity, unusual activity, providing insufficient suspicious information, suspicious fund transfer activities, certain bank employees arousing suspicions when a bank employee is involved in facilitating a part of money laundering. So a banker can be hauled up by any enforcing authorities for helping a person in money laundering. So that's a very strict law. Risk management, we manage the risk. Bank needs to categorize their customers based on the risk: low, medium and high. Either of these three risks has to be given to a customer before we open an account, depending on the origin of the amount, profile of the customer and transactions in the account, and ID and address proof of the customer. Low risk customers, individuals, salaried employees, government departments, regulators, regulatory bodies like RBI, SEBI, IRDA, government owned companies. Medium and high risk, NRIs, high net worth individuals, trusts and charities, NGOs receiving donations from abroad, entities dealing in jewelry, diamond, gold, precious stones, arms, ammunitions, overseas corporate bodies, OCIs, OCBs, PEP, politically exposed persons, and non-face-to-face persons like travel agencies, property dealers and builders. They are come under medium and high risk. KYC for existing accounts to be done, and re-KYC is done if the risk is high within 2 years, medium within 8 years, and if it is low, then we have to do it after 10 years. Pitfalls of not following KYC. What can be the drawback? Reputation of the bank is gone if we are having frauds in our bank. Reputation, operational risk, any fraud can happen. Legal risk, any lawsuit can be filed against the bank. Scope for possible money laundering. So in a perfect world, you got to have this. So this was a reminder of Twin Towers to avoid terrorist activities and money laundering also, right? So be watchful. While you open the account, be careful. Keep your eyes open, sixth sense open, third eye open. People may misuse you when you go to open their accounts, right? So I hope you enjoyed this video on this money laundering. I'll be uploading lot many videos and they are available on my website also, BankTekSkills.com. Lot of videos on FINACLE, non-FINACLE topics, trade financing, loans, and ratio analysis, balance sheet analysis. I'll be uploading. I have already uploaded a lot of topics on that, and I'll be uploading more. So have a nice time, and thank you so much for giving a wonderful support, your approval to these YouTube channels and a BankTekSkills website. Thank you. Have a nice day and wonderful learning journey. Thank you.